In this week's episode of the Stockscores Market Minutes, I'll talk about the recent market volatility, the crash, and tell you where it is likely to go in the near term. I will also do my regular weekly market analysis. We'll look at a market scan on Stockscores in search of opportunity and look at the day trade of the week on INO. So lots of volatility again this week as the coronavirus really grips the market in fear, and that creates a lot of opportunity. As much as it may be difficult for a long-term investor to watch their stocks go down significantly, for the short-term trader, there's really a ton of opportunity. You think about a stock like Apple, which on Monday went up 10% in a single day, and for a company that size to make that kind of a move is really unparalleled. And so what the correction or crash does is brings in a lot of emotion. And emotion means the mispricing of stocks, because fear and greed, two emotions, will cause people to overestimate what a stock is worth or underestimate what a stock is worth because of fear. And so if you are a short-term trader and you are active in the market, you can make a lot from this. So I'm going to talk a little bit this week about the phases of a stock market crash. There's actually very predictable patterns that happen, and I'm going to take you through those so that you on your own can sort of navigate through this volatility. So stock market crashes run in repeatable patterns. We've got the breakdown, which is the break of the upward trend. That happened about 2 weeks ago. I'll show you on a chart these things in just a moment. Then you have the sell-off, and then you have the bounce, which we had this week starting on Monday. Then you may have a retest. Ultimately, the crash is over when there is a break of a downward trend, and then there is the comeback, which also brings a lot of opportunity. So the question is, where are we now, and what will happen next, and how do you trade it? So let's go into the chart that I've prepared. This is a 30-day, 60-minute chart. So this is as of Friday's close, and you can see that the crash started right there with that abnormal price move to the downside with abnormal volume. That was February 20th. And on that particular day, we broke this little upward trend line. So that was the breakdown. And then we got the sell-off, and it really intensified. It gets to a parabolic trend. Orderly downtrends tend to be linear, but emotional trends are parabolic. You can see the curve that we can draw there. Now, if you were watching my video last weekend on the crash, you will recall that on Friday, I said that the market was likely to bounce this week simply because we had a break of this little downward trend line from a rising bottom, and we went out of the day on Friday near the highs. And the result was the next day we had a huge move to the upside for the overall market. And we actually grinded our way higher for about 3 days. But then again on Thursday, we broke down, and that is the start of the retest. This happens almost always in market crashes. And so we went down for 2 days, and then we broke the downward trend line on Friday with some abnormal volume and abnormal price move into the close. Very similar to what we did last Friday with abnormal volume and abnormal price movement into the close. And so my prediction going into next week is that we will probably move up into that 310 level. Now, I say probably because nothing is for certain. I'm going to say that there is a 70% probability that the market will move higher early next week. That does not mean that the crash is over, because there is still the chance that we will break down through this low point. And if we break down through that, it's roughly 285, 286 on the SPY. If we break down through that, we could accelerate to the downside. So let me show you a longer term chart of how this often will play out. So this is the chart of the SPY, and this is the daily chart that we're in right now. You can see the big sell-off, the bounce, and now we're doing that little retest. So far, we have a rising bottom, and as long as there are rising bottoms, we have some potential optimism. But if we go back to how this chart looked back here, we had a rising bottom, and we broke the downward trend line, and that was good. And that's kind of where we're at right now. We're sort of right about there. However, we also rose up to resistance, got stuck. By the way, this is the crash that happened in 2018. And we got stuck, and then we rolled over, and we broke this cycle of rising bottoms. And so what you want to watch for in the days and perhaps weeks ahead is to make sure that we don't break through the lows, break this cycle of rising bottoms, because if we do, we're going to get the next phase of the downward trend. So when I say that in the short term, we are likely to bounce back and move higher, what the sort of the caveat on that is, as long as support isn't broken. So if we go back to the daily chart as it shows itself right now, we need to make sure that this at least 285 level isn't broken, but you could also argue that around about 290, which is where the upward trend line is, as long as that is not broken, we shouldn't get another wave to the downside. So my prediction going into next week is we probably move up into that 310 level, probably get stuck because that is the resistance level, and then probably pull back. But as long as we don't pull back so far that we move down through those support levels, I think the market is bottoming. All bets are off. If we start to break down through the 290, 285 zone on the SPY, then you want to be real defensive and focus on the short side, because we can make lots of money from markets selling off either by shorting stocks or by buying those inverse ETFs or things like the VIX, the VXX, which is an ETN that goes up very dramatically when the market goes down. I'll show you a chart of that later on in this video. All right, so let's get into this week's analysis of the US markets. We've kind of done this a little bit already. As you can see, that short-term chart went parabolic. We broke it, we rallied, we're doing a retest. We broke this little pullback, so we should move back up into here and get stuck in around 310, 312, that zone this week. Very strong volume, which is often a sign that the institutional investors have decided it's low enough, and they come in and there's this capitulation and the market bounces back quite nicely. So we had that late in the day on Friday. That's a positive for the market moving into next week. Looking at that longer term weekly chart, you can see, of course, that this has been broken. We have come into this support zone. We've held it so far. So far, everything's pretty good. But if we start to break down through 285, we may then move down into this 275 zone, 273 zone on the SPY. Now, the small cap stocks not doing quite as well in the sense that we don't have the rising bottom on the small cap index. The IWM is the ETF. And we've kind of blown through this support zone. And now, why is that? Well, the Russell 2000 is made up of small cap stocks, and those tend to be traded more by retail investors, individual investors, as opposed to the large cap stocks, which are often dominated by institutions. Retail investors, normal human beings, tend to be a lot more emotional. And I think that's one of the reasons we've seen stronger selling pressure in these small cap stocks, simply because retail investors are subject to fear more than the computers that these institutions run. And perhaps that's a reason why we are at, annual lows on the IWM. All right, now moving along to the Canadian markets, we have the TSX, which has very similarly broke the upward trend line, gone parabolic to the downside, bounced back. Now we have the retest, and again, it looks like there's a good chance that there's a little rising bottom forming there, which means we should move up to that resistance level. What we also want to see is that this downward trend line is broken from a rising bottom. So if we rally up to the downward trend line, stall, and then break the downward trend line from a rising bottom, that's another good sign that the market is turning around. Don't get me wrong, none of this has happened yet. It's just things to watch for. Of course, the other thing to watch for is, do we break down through this lower boundary just below $24 on the XIU? If so, then you need to get pretty cautious and defensive yet again. Looking at the longer term weekly chart, you can see that the upward trend line broken. We've come into support, very much like the S&P 500. Will that support hold? So far, it looks like it's trying, but it doesn't mean it will. If we break down through that support level on the weekly chart, then we have to worry that the next stop is way down there. And on to the TSX Venture, which really has been an underperforming market and was trying to turn around. The downward trend line was broken here. We were building a rising bottom. I had some optimism that maybe we'd get up on a break through the rising bottom or from the rising bottom. It never happened. We broke down instead. We broke this support. And so this market looks pretty sick. And therefore, you want to be very cautious in general with these stocks. On to currencies. Here is the US dollar. And we have a upward trend line here that was broken there. And then we built a falling top. and we've then broken down again. So that, generally speaking, looks negative for the US dollar. We do have some support here, which is holding right now. If we pause for a week or two and then break down through this support, then I think our next stop is down here. So I'm a little bit bearish on the US dollar right now. Canadian dollar has also suffered a breakdown. We don't need to talk about that too much because it's stuck in that sideways trading range that it's been in for some time. On to the interest rate chart, and here you can see we've gone absolutely parabolic to the upside. So we had a linear trend here. When you go parabolic, you usually fall back to the trend line. We've gone parabolic. What do you think is going to be next? A pullback to the trend line. So if you are thinking about getting a mortgage or borrowing money in some way, now is a great time to do it, because the fact that this bond market has gone up so significantly means that interest rates have dropped significantly, and therefore it is a great time to lock in some of that debt. And so if you are in the market for a mortgage or borrowing in some way, I think it's a great time to do it, because you've got an emotional market that has caused interest rates to drop a lot. On to commodities. And first, gold. It made a good comeback this week. I was a little worried last week because of that bearish engulfing candle and the breakdown. Upward trend is still intact, and until that upward trend line is broken, I think you can be bullish on gold, but I'm not eager to initiate positions because this trend is pretty mature already. We had that breakout back here, which is when the trend started. On to oil, which is really the craziest of negative markets. We've had oil just really suffer so bad through this coronavirus debacle, and oil certainly hasn't been good for a long time, but it's really getting emotional to the downside. I think it creates opportunity. I think there's a lot of fear in the oil market, and people don't want to touch oil stocks, and that means that there's bargains out there. And so if you can be patient and build those positions on the cheap, as long as you are willing to give it some time, I do think that these things will bounce back eventually from this oversold fear condition. And finally, the fear chart, which is the one that I was mentioning is a great way to make money from a market going down. This is the VXX, and it is based on the volatility, the implied volatility of the S&P 500 futures contracts. It goes up in times of volatility. You can see the dramatic gains. Well, notice what happened on Friday. We hit new highs but closed below the open. That is why that candle is red. And that means that it is likely that this will pull back near term. Now, if it pulls back for a few days and the market goes up for a few days, and then the market starts to roll over again and perhaps look like it's going to retest the lows, at that point, I think you can trade the VXX. I would not trade this on Monday unless things really get ugly to the downside for the stock market. I think the VXX is likely to pull back, much like it did last week. It pulled back for a few days, and then it started to rally again, and that's the kind of signal you want to watch for, is wait for the pullback and buy the dip if it starts to then go back higher. So my ratings then, US stocks neutral on both time frames, Canadian stocks neutral on both time frames. You might wonder why neutral when we've got so much volatility, and it's simply because I think the market is likely to bounce back in the near term, but by no means am I an optimist looking out more than a few days. We'll have to see how things unfold. Gold is in a long-term upward trend, so we're bullish there. Neutral short-term, as I think it's a little bit stuck. Oil, bearish on both time frames, but that really oversold condition creates an opportunity if you're willing to be patient. Markets continue to trade on that coronavirus concern, which has brought out extreme emotion and volatility. Now, as I said, emotion creates opportunity, but you have to trade with a little bit of a contrarian view. Buy the dips and sell the rips is the saying. Stocks look likely to move up early this week, but that may not last, so we got to watch the charts very closely and be willing to move in and out quickly. Oil is brutal right now. That creates an opportunity. Gold is strong, but I don't think either of those trends may last in the near term. All right, so let's jump over to the Stockscores market scan now and take a look at a scan that I showed you last week, which is something I call a dead cat bounce. And it looks for stocks that have sold off heavily and are managing to close above their open. And so I built a market scan in Stockscores to do this, and I'm just going to jump over to the website now. I've already loaded it up. So for those of you that are members of Stockscores, here's the settings. Anything highlighted in blue is what we're looking for. I've sort of focused in on stocks over $10. You don't have to do it that way. But again, anything highlighted in blue is how you want to set this up. I'm going to run this market scan, and it goes through the entire North American market, found 32 stocks that meet the criteria of that scan. And I'm now going to go through them and just look at some of the patterns. So first up, we have Kinder Morgan, which I liked last week as well, and it had a pretty good bounce, moving from just over 19 to about 2060. Good little bounce. It has pulled back again and doing another retest. So I think that this stock, decent potential that it's going to rally up early next week. So I think that's a potential swing trade. When I say swing trade, I mean something that you're only going to hold for a few days. This Elan, very emotional sell-off. You can see the parabolic move to the downside, but on Friday it managed to close more or less where it opened after hitting new lows. So I think it is due for a little $2 or $3 bounce. And that's what this strategy is all about. It's not about necessarily holding these things long term. It's about taking advantage of the emotion. We go from $34 down to $26 and then show signs of a bounce. You can buy the bounce, and if it doesn't work, you get stopped out at $25. If it does work, maybe you get up to the $29 range and make a quick trade that way. So I'll just go through these and I'll highlight the ones that I like. I don't like every stock that comes up in the scan. We always have to inspect the chart. I think Morgan Stanley looks good. That's MS. Looks good for a bounce back early next week. First Energy, not so much. Some of these ETFs that are based on the overall market, SPXL, is an ETF that's 3 times leveraged to the S&P 500. Because I think the S&P 500 is going to bounce, you could trade something like this, perhaps get 10-12% out of it in just a few days. I think that's a reasonable target. If it goes down through 45, the call is wrong and you have to take your losses and move on. And don't avoid the risk management part of this, because these don't always work. We're just trading probability. Intel, INTC, looks pretty good to bounce. I'll keep going here. Here's Q, or the triple Qs, TQQQ, also looks decent to bounce, maybe 10 or 12%. Again, those are triple leveraged, so they can make a big move. XLK is the tech sector ETF. Could see that perhaps move 5-6% if there is a bounce back near term. Lowe's, LOW, decent. American Express, AXP, I think has got good potential to move up, perhaps $10 on a bounce back. So there's lots of opportunity that's created by emotion, and this is the kind of scan that I like to run. IBM, I think that one looks pretty good. The Russell 2000 ETF, IWM, looks decent. UNP, Union Pacific, looks pretty good. Now we're getting into more expensive stocks. Not everyone wants to trade these more expensive names, but think about it in percentage terms. If a $200 stock can move up 5-10%, that's still a pretty decent move for a short hold period. All right, so let's jump back to what we normally do here, and that is the day trade of the week. So this is really for educational purposes, just to highlight my day trading strategy. This is a stock we picked on Friday morning in the active live service, and you can see the action candle right there, breaking from low volatility, all of the things I look for, and you can see the economics of the trade. For $100 of risk, only required $675 of capital to put into that trade using 3-to-1 margin. It earned 5.3 times risk, $530 gain. That's a 78% return on the capital required. So that's a great trade of the week. All right, well, that has been the Stockscores Market Minutes for March 9th, 2020. Hope you've enjoyed it. Please click on the subscribe button, click on the notifications bell so that you get email alerts when I upload a new video. Try to keep you updated on what's going on in the market. If you like the video, click on that like button, leave a comment, and most importantly, trade well.